The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. One of the things we wanted to start off with today, of course, is the DAX index. As you can see here on this half-hour chart going over the last several weeks, we've made a head and shoulders pattern. It is perfectly symmetrical from the left shoulder to your right shoulder. The time is correct. From the head to the right shoulder, that is correct also. So as long as that stays in place, there is a chance that the market could sell off a bit. But as our previous leader, John Logan, talked about with Joey John, that, with Yellen in there protecting her job, it's going to be pretty hard for this market to go down. Even if it goes down a little bit, then it'll be, after the election, it'll be a totally different thing. That's only 20 days away. This is an anniversary date, folks. This is 29 years ago of the October 19th crash of 1987. I was fortunate enough to call my mentor, John Hill, who took me under his wing in 1970 to teach me Fibonacci and a whole bunch of other stuff over the years. John just turned 90, still going strong, doing the same thing he was doing at 40. And we had a really great conversation, and we reminisced about getting our ticker tapes for the CME and the Board of Trade. Years ago they were Western Union ticker tapes, and one would come through from the Board of Trade, the other one would come through from the Merck, and they would go into these big wicker baskets that they supplied to you. And it was amazing. You'd be halfway through the day and you'd be in the midst of, marking down the 5-minute charts and stuff, and that you'd run out of paper and you had to fix that. Well, that went on till, about 1981 when we started getting some electronic stuff. But we really didn't get any intraday prices and stuff until 1983 when CompuTrack came out with their stuff with Tim Slater and his group. So that was an interesting thing to remember. Another memory that I had was on this day, about 6 o'clock in the morning, I got a call from a couple of my customers that were playing golf down in Los Angeles. I've kept in contact with them all those years. And they were playing golf, and they were both short the S&P, and they wanted to know what was going to happen. And I said, I don't know. I said, finish the round of golf. I said, it's pretty bad across the world. I said, don't worry about it. And, you're positioned right. Well, it ended up being a, big move. I believe the S&P was down, as I recall, I think it was down 50 handles. Now, 50 handles then, because it was 10 times what it is now. In other words, the E-mini, when it broke up, it traded, and it went to 1/10. So we were trading $500 a point back then. Now it's $50 a point. That would mean that the E-mini S&P on a day like today, 1987, would be down 500 points. Now, put that in your memory bank and see what that looks like. Folks, when it got down there after the first 2 hours of trading, when we realized the end of the world was at hand, all the pit traders left. The only people who were in there were filling paper, and that was mainly from some of we had very few. There was a few hedge funds, of course, but not many. John Vogel from not Templeton. What was he? Was John Vogel Templeton? No, that was John Templeton. John Vogel was somebody else. I can't remember which. He was the one that started these ETFs and, indexed funds and stuff. Vanguard. Thank you very much, Duffy. You're the best. Anyway, that was where some of the trading was going on. But the bid and offers was $2,000 to $5,000 apart. In other words, you had to buy, you had to give up $2,000 or $5,000. And you'd also be looking at the On the other side, it'd be the same thing. But that went on for all through the 19th and part of the day of the 20th. But then in the afternoon of the 20th, they came in with the plunge protection team, supposedly. And basically what Greenspan did is he called all the major banks, the Goldman Sachs, JP Morgan, and he said, the doors are open to the vault. Come in and start buying stocks. Don't worry about anything else. The vault is open. That was the bottom. That was also on the 20th. We made a slightly lower low in the Dow, which was an exact to the tick 61% retracement of the August 9th, 1982 low. So that was the best buying opportunity, in the late 80s. And of course, we did go a bit higher, up to 18,000 and change. Okay, we've got some charts that we need to focus on here today because we've hit some pretty nice spots in some of these things. We've already looked at the DAX. The next one we want to look at, thanks to our good friend yesterday that alerted us to buy the Treasury bonds down there at 163.10. You'll notice here that the bonds have gone up and completed their I think they missed it by about 2 pips, as I recall. We got up to 164.26. We're looking at 164.28. That completes the ABCD pattern here in the Treasury bonds. And so if this is the case, we should start to sell off, which we've already dropped one full handle, which is $1,000 in the Treasury bonds. Now, I've had a request to take a look at Netflix. So what I'm going to do here is to bring this chart out to let you take a look at it, to show you what's happened in the past, because what happens in the past just repeats in the future. If you look at these 3 red boxes that are here on Netflix, the first one was in the April-May time period. You notice the big gap that we had. Notice how that gap came up to be filled a little bit later. It wasn't filled until October, just about 2 weeks ago, but the gap was filled. Look at the gap in July. That was a huge gap. We dropped from 100 all the way down to 84. That was a 16% gap. And then, of course, yesterday we had this other gap, a huge gap, that we were up 22% at one time, right near the 78% retracement of the whole move from November. So gaps will be filled. The problem is that you have to determine how you're going to enter them. Now, there's nothing you can do about a gap because it's supposed to be unknown. But believe me, I imagine you would have seen some unusual option activity around these times, because this is where some serious money can be made by buying out of the money calls, and they can really move very, very quickly, of course. But anyway, these gaps do get filled. You don't see these gaps in foreign exchange very often. It's almost impossible to see a gap on foreign exchange except for Sunday night. And so these gaps do occur on stocks all the time, but they do fill. It's just a matter that it takes time to get it to do that. Now, the other one that we talked about was the VIX index yesterday. We were looking to, in fact, we were buying this down around the 13 level. We're now trading at 15, spot on. And my strategy on this is if it gets anything below the 15 level, then I would say, it's not necessary to hold these calls any longer. Take the profit, and we'll reinvent them again. The other thing that I wanted to mention to you is yesterday I was in contact with Bill Meridian of Cycles Research out of Vienna, Austria, and he shared me his update of what he's looking at, and we'll cover that when we get back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've just posted the interim update from Bill Meridian of Cycles Research in Vienna. If you'll notice here, this is related to the work of Richard Arms. He does, quite a bit of stuff with the thing that has his name, the Arms Index. The first time I saw the Arms Index was in the book by William Garrett, the Torque Analysis of Stock Market Cycles. But Richard Arms has been doing this for over 45 years, I believe, and so he's had a really he's got the real skinny on how this thing works. And what Bill is showing you here, that this is an extremely bullish situation that we have in the Arms Index. It's related to the volume also, so we must keep that in mind. Remember, Bill was telling us around the middle of October, around the 14th or 15th, the bottom came in on the 13th, and so far we've started, to move a little bit higher. And believe me, this thing could go higher, and it is going higher right now, so we watch it. Remember, the breakout area in the S&P would be above, 2160, and then, of course, after the circus show that we have at the Circus du Soleil, we'll see what's happening. We have our good friend Rich Anderson is representing all of us over there, folks. He's there for the debate. So we'll see how it works out. I spoke with him briefly yesterday morning, and he said it was almost like Super Bowl Sunday over there. So anyway, we will keep an eye on. The next one we want to look at here is the gold market. We came in this week with a slight bullish bias. We held that 78% retracement down there at 1247, and now our target on this would have been 1273.50. So far, that's been the high of the day. That's nothing more than an ABCD expansion pattern, and if you're looking at it over the last 10 days, it's also a butterfly pattern coming up in here. If we can get above 1275, folks, we could be off to the races. The slight problem that we have here is the fact that the platinum is moving hardly at all, and silver hasn't even taken out the highs of last week yet. So those are things that you want to keep in mind if that's going to see what's going on, and we'll see what's going to be happening with that. Now, someone's asked a question about the corn. If you'll remember last week on Monday, we were talking about, that was on a Friday. We were making a beautiful ABCD pattern in the corn, and that has now come down quite a bit, and you'll be able to see. Now, I've had a question here from Andrew about the ARMS index chart and Bill Meridian. Andrew, it is a couple levels over than my pay grade, but if you'll email me, I will forward the letter on from Bill, his update, and he will be happy to let you could read it, what he has to say. But he was on talking about this last couple of weeks ago, and it's starting to work out, so we need to pay a little bit of attention to it. So that would be the best way to look at it. I'm basically, Andrew, what I do is pattern recognition. I do one thing relatively well, and even that sometimes is suspect, but I do understand patterns. I understand the cycles. I know a tiny bit of astrology. Fortunately, a lot of my friends are really smart, and I'm able to draw on those. And speaking of really smart, we will have Al Larson on tomorrow at Money Tides, the man who I believe he's the smartest man that I've ever met. The smartest man I met passed away 1992. His name was Dennis Regan. But I believe Al is probably really close to his class. They're definitely in the IQ area that's really scary. But anyway, he'll be on talking to us. And not only that, but Al he does a lot of things, but he's also a very consummate astrologer. He really understands astrology. So we'll try to put his feet to the fire on the election, which I'm sure he's watching it, because being in Colorado, they have a lot of people that follow election stuff up there, because it's too cold to do anything else if you want to know the truth. Okay, now we want to take a look at one other one here that looks really interesting, that we were listening to him. I don't know if he knows anything about the aliens and UFOs, but he might, because he did a lot of work for AT&T over the years after he finished his double PhD. Let's take a look at a chart here that they were talking about. John Logan and Joey Johns were talking about this. This is the dollar yen. As you can see here, we have this really nice ABC Gartley pattern coming in here at the 78.6 at this 103 and change level. Hasn't moved very much as of yet, but it's completing this level at this particular time. So it's one of these things that you don't have to risk very much, to see if you're right. Longer term, of course, this thing has been in a pretty good downtrend, but this is the first time we've had a pretty good correction. That should tell us that this should be the spot where we're going to be looking at it. Now, I had a request to take a look at another stock that's been in the news for quite some time now, and that is Twitter. And we'll take a look at this. You'll notice when Twitter was going to be bought out, it was making the big ABCD patterns up there. That was also that area of 25 was the 61% retracement of the high from 2015 to the exact penny. So that's why that was such a powerful resistance level. I don't know anything about this buyout stuff, but look at it's dropped more than 25% in a matter of a week and a half. So it doesn't look like the people want to buy this thing out. If we're sitting right at the 78% retracement right now, right around the 16 and change. And as long as we stay above 16, it's got a chance to rally. How much is it going to rally? That's anybody's guess, but I don't think anybody wants to buy this thing out at 25. Remember, when this thing was at 25, then we had the big gap down. That's when it was reported that all three people had pulled out of the bidding for Twitter. That was Google, I believe Google was one, Facebook was one, and Disney. All three of those pulled out, all at the same time, at the same day. Hello? Anybody home over there? That don't happen. Give me a break. Maybe there's a little leak somewhere, and you know where the leak occurs. Anyway, that's what it looks like with Twitter. It's got to hold this level of 26 or 16, or it's in really, really bad shape. Okay, now regarding Disney, Disney's also setting at the moment of truth here. You'll notice here that we're down around this 90 and change level in Twitter. Let's try it again, Larry. At Disney, that's a 78% retracement going back to the February lows. It's also a nice little butterfly pattern over the past month. So there should be a lot of support here at 90. At 89, you don't want to even look at it, but at 90, it looks pretty good, but we'll see if it's going to hold that level or not. That's neither here nor there. Now, before we get to the break, probably won't make it till the end of the break because I wanted to discuss a little bit about the foreign markets here, and I wanted to go across the pond, and we'll be looking at the thing for the FTSE. We want to take a look at that.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted a quick note here. Last week we were talking about hogs with Rich Anderson on the line, if you remember, and the December hogs were trading at around $42 a pound. That is $4 under the cost of production. And what's happened these last couple of days here is that we're making new lows in hogs again today, but the open interest has started to drop. And when open interest drops as prices go down, that is people exiting the market. And so it makes itself very susceptible for a major bottom. We've seen the exact opposite of this and other things, but that's what's happening. So keep in mind that hogs opened about 30 cents lower. I think probably the one you probably ought to be looking at would be to buy either February or April hogs that are much higher in price, because they're already factored in that they're going to be above cost of production without too much. Now let's switch over and go across the pond here, and we're going to take a look here at the FTSE. This is the London stock market, and this is a 60-minute chart. If you remember here, back on the 11th, we made a new high. And if you look at it really closely, those of you that follow the patterns that we look at, you'll notice that was a really nice three-drive to a top pattern. The market broke down into the 13th of October, rallied up to exact 61%, came down, made a double bottom, rallied up to the 78% retracement, and yesterday it made a Gartley almost exactly at the 61% retracement. So this market also looks like it's poised to move a bit higher. So we want to keep these things in mind, watching all these things to see what's going on. We've had a little bit of conversation here that cash hogs are selling for 49 cents, and yet the December hogs are selling for 40 cents. Folks, that's a situation where they've got somebody that is long that market that's getting out, and they're forcing him, to get out at a lower price, which is normal because they're below the cost of production. But as open interest drops, you'll notice that that's a sign of strength. Just like if prices go up and open interest drops, that's a sign of weakness. That means people are leaving the market. We've seen this in gold. We've seen it in other things also. So this is a time to be looking at hogs. Now, you probably should wait for a good bottoming pattern in here. Frankly, we took a nibble at these at the $42 level, risking 3 cents in these down to 39 cents because we think there's a really good possibility. Several years ago, we had hogs below $40 a pound, and you won't believe this, but the doggone things went from 40, they went to $1.35, from 44 cents to $1.35 over a period of a year and a half. So we'll probably see something like that again, and we're going to be watching it very, very closely. We have our good friend Mr. Z watching it closely. So watch these hogs, folks. They trade quite a bit, not as much as cattle, but they're easily tradable. They also have electronic trading, and it's a pretty good market to watch. But watch for the pattern because these are when you get these markets that are extended in one direction. It's got too many comedians in this room. Then we want to be able to try to take advantage of it. We'll wait for the pattern to form here, but I think any move above 44 now would in the December hogs would trigger that a major bottom has coming in. So we'll see if that's going to be the case. Okay. We mentioned, we had one other question that someone asked us about. Hold on, I want to pull up the chart before we get to it, and then we will be okay. This is the NASDAQ. We were talking about this yesterday also. You'll see that we did get up to the 61% retracement yesterday in the NASDAQ. We've backed off just a little bit from that level, not very much. I frankly don't think we're going to see a whole lot of action in the market until the Cirque du Soleil is finished, and then we will probably get some, feedback, here and there. But I'll tell you, I have friends across the pond and in Singapore and in Hong Kong, and it's embarrassing to try to explain what's really going on with these with this stuff. But it's really it's a media circus, is what it is. Okay, let's move on. Okay, let's take a look here at the next one we want to look at is the crude oil market. We are very, very close to a breaking out in crude. It doesn't take very much. If I can just find the chart, I just did it. Oh dear, let's see if we can find it here. Oh shucks, well, I'm going to have to hold off on that crude oil because I know I put it up here, and boy, I've got so many charts up here now I can't find them all. Anyway, I know the numbers. At $52 a barrel, if we get above $52 a barrel, that's going to be a valid breakout in the crude oil. I really feel very strongly about that. The gasoline has also gone up and matched its old high up here at the 151 level. We'll put that one in to let you take a look at it, and you'll be able to see that we're back up to this 1.51 level in natural gas. So all of those are telling us that we're getting pretty close. Here we go. Now I found the oil. You'll see here why the 52 level is going to be so important. Now, just remember that if it takes it out by just a little bit and then doesn't continue to run, then this could be a false breakout. So you've got to watch that $52 barrel level in the oil. And remember, we're getting all kinds of rhetoric out of the Middle East about this potential oil deal and things that they're doing. Folks, if you've ever want to not believe anything, make sure you don't believe anything they're saying, because anything they're saying, they're not going to tell you. That's pretty much the bottom line. So make sure you keep that in mind, because it's a very, very important concept to remember, because what they're telling you is not what they're doing. And we see this across the board in everything. Now we're starting to see some more strength now in the U.S. dollar, i.e. Lower euro. The euro is getting down close to this 109.50 level, which is a 1.27 expansion of the previous move. But it looks to me that we've said over the years here, well, not years, but over the weeks, that the dollar does look like it wants to go higher, i.e., lower British pound, lower euro, because that's I think it's only 47% of the dollar index now, with the Chinese renminbi in the market. So we'll watch this one with a little bit of interest also. Okay, now the next one we have here, 1 second here, I've got to get ready for the next chart, if you'll bear with me. I want to make sure I get the right one. This is the one that we're going to be watching here. Hold on a second. I lost that one. Uh-oh. All right, 1 second. I have a slight technical problem, boys and girls. Give me a second here, and I'll get this fixed. Okay. There it is, the dollar index. This is what I wanted to go over to show you where we are with this. This thing does just not want to back off. It is got a lot of power to it. We're above 98 again, and it looks like we want to go to that level that Basil talked about yesterday, which is right near the 100 level in the dollar index. That's also a 1.618 expansion, and it will also be a really nice ABCD pattern at that time. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we've had a request to take a look at sugar the sweet. Anyway, as you can see, this is a long-term chart going back over the last year and a half. We had that big 1.618 expansion. If you notice that we've been here for well over a month, this is a situation that if we get above $24 a pound in sugar, we could go substantially higher. However, there is a bearish bias to this because of all the ratios and patterns that have completed up in this area. Plus, we had that shooting star candle at the exact high. So that's another one that wants to make it. They're looking now. Here's something that is interesting here. If we take a look at this copper market, you're going to see here we're completing a Gartley pattern at the 78% retracement at $2.10 a pound. It hasn't rallied anything over the last few days. Like, we've had a little bit of a rally in gold, silver, and platinum, but copper has not moved. Now, whether this is bearish to the stock market or not, it used to be called Dr. Copper because it was the tip-off of what the economy was going to do, because so many things in electronics and building computers are all related to the conductivity of copper. So this pattern is completing. It has a nice cycle component between January and June to October. So watch this one very, very closely, because if we can hold the 210 level, we've got a really good chance. But should we hit the 208, that tells us that we're most probably going down to make an ABCD pattern down around $2 to $1.97 a pound. In copper. Remember, we got to $1.94 in this way back in January, and so this is at a really key level here at copper. It's got Mother God and Country. You've got a 78% retracement. You've got an ABCD pattern. The only problem is you had that really bad day in the end of last week where it dropped quite a bit, more than 8 cents a pound in one day, which is really unusual, but it's held up since that time. It didn't break down, so that's a sign that it's got a little bit of a chance of making a move from this level. I think that's something that we really want to keep an eye on. Also, the next one is we wanted to talk a little bit more about this situation in junk bonds. I brought this to your attention on Monday. I still think this is where the real problem is going to come when this the end of this thing is over, whenever that is going to be. But you'll notice here that the Treasury bonds and Treasury notes are dropping, whereas the yield on the junk bonds has been going down. In other words, junk bonds have been going higher, but the AAA stuff, the bonds and notes that are U.S. government quality, have been dropping quite a bit, as you can see here. This is a situation where people are scrambling for yield and not worrying about, the safety of what you're watching. And that's not what you're supposed to be doing, folks. Like Bernard Baruch said, be concerned on the return of your money. Don't be concerned on the return on your money, because that can change, little by little as we go through. Now, I wanted to mention one other thing. I'm going to be doing this seminar on the 26th, and I'm going to be doing it on the pattern that Bill and Roy Longstreet gave me many, many years ago, back in 1985. And I'm going to really, I've shown it a few times, but I'm going to go over the mathematics behind it and the theory behind it. And I'm having a real problem, folks. I can see lots of them that work, but I can't find hardly any that don't work. I mean, this is scary. So I'm going to be watching this very, very closely. So far, I've got about 30 slides to go through, but I'm having a hard time finding failures. I mean, it really is. When you see this pattern, it is better than 80% accurate. So if you're looking for a pattern, to try to give you a real edge, drop into TFNN, help support them, because this is going to be a really good pattern to look at. It's going to have some good information in there. It's really simple, but boy, it forces you to trade with the trend. The risk reward is a minimum of 3 to 1. And you know right away whether you're right or wrong. I mean, you don't even have to worry about it. So it'd be perfect for options. So this would be something that you want to pay, pretty good attention to if you have an interest in pattern recognition. That'll be on September the 26th, but I think it'll be good. But I am having a hard time finding failures in the darn thing. So we'll see how it transpires here by the time we get ready for the seminar. But we'll get some ideas of when it's wrong and when it's right, because you have to be concerned on when you're wrong. Paul Tudor Jones, who's one of the best in the business, he always said, that the winners think how much money they're going to lose, because they're always worried about their capital. Losers think how much money they're going to win, and that's why Las Vegas builds all these wonderful things. And that's pretty much what you're watching when you do this. Remember, I want to talk a little bit about forecasting here. We get this from our good friend in the room, Mark P. But this is a real interesting chart that he sent on weather forecasting for the hurricanes, and you can see that that's pretty much what pattern recognition looks like sometimes. That everybody's going to have some type of ideas. In other words, these are the different forecasts from the different people that were forecasting this hurricane that came through Florida a few weeks ago, Hurricane Matthew. And, look, everybody had an opinion. And remember, everybody has an opinion. It's like an armpit. It usually smells, and that includes your own and mine too. So you've got to be able to to make your own decision and take responsibility for your own trades, because this business is all about the mental part of this business. That's the main thing that you want to keep in mind. And you got to pay close attention to the trade size that you're doing, and you'd never risk more than about 3% of anything that you're doing. I mean, you don't have to risk a lot in these markets. You just wait and be patient to try to get to where you're going. I see that they're talking a little bit about Intuitive Surgical. I happen to know one of the gentlemen that started that place, one of the doctors. He actually had a place in San Luis Obispo 30 years ago. He was a eye surgeon, and he's since passed away, but he was one of the original people in that, and he made a great deal of money. He bought that thing when it was just a few dollars, and now it's trading for $690. So those were the days, as they say in the trade. Okay, the next question that someone asked was about the Canadian dollar, and we will be looking at that shortly, because we were talking about this on Monday, and as you'll notice, one second, slight problem. There we go. Okay, here's the Canadian dollar, and then this is related to the oil, because as this goes down, the oil goes up. and now we're starting to to break out. This is going to the downside. We're trading at around 130 now. We're down another 150 pips from where we were on Monday, but this is also related to the oil market too. That is also giving. Someone's asked a request for coffee. I have not traded coffee in 45 years, and I'm not going to start now. So I'm going to pass on that. Andy Heck can do that for you out of Las Vegas on his commodity show. But I actually I get ill when I do the coffee. And let me explain to you why, folks. I hope we got the break here. Oh, I'll do this after the break. It's interesting why I don't trade these things.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to try to explain why I do not trade coffee, cocoa, sugar, or orange juice. This goes back to 1973-74. Remember, we didn't have the computers that we had now. We were using a Bunko Ramo board, one of these big things across the wall at the Conti Commodity Office there in Wilshire Boulevard, up on the 20th floor of the McCulloch Oil Building. And they had a squawk box, and the squawk box was coming from all of the exchange floors. The New York Board of Trade, where they traded the sugar, coffee, and cocoa. Chicago Mercantile Exchange, the Board of Trade. Each one of those gentlemen would give their people their referral where we're going. That's how I met Rich Anderson. I was making comments about Fibonacci numbers way back then, and people had some interest. Rich happened to be one, and we became friends, and we've been friends for more than 40 years. But the main thing I wanted to mention here is one day I was long coffee, cocoa, and sugar, and particularly this one was in coffee, and it was limit up bid. In other words, there was no selling, and so I told my broker to sell. I think I had 4 contracts of the coffee, and I sold it, and he came back when the fill was at limit down. In other words, a $4,000 swing. And the broker on the squawk box yelled out, "Do you want to take the trade or not?" And all my broker was doing was shaking his head, yes. And what had happened is I just happened to pick the exact high of the market to get out. I was about 30 seconds, late to get it in, but that was the top of coffee for several years. But it left such a bad taste in my mouth, which coffee does anyway. And the same thing is true with cocoa and sugar. And orange juice was the worst because it was basically all relatives in the orange juice pit. They were all cousins or uncles, or everybody was related in the orange juice pit. So, and it was a very small pit. There were like 6 or 7 people in it at the time. So now everything's different. You got so many things to trade. I think there are 280,000 combinations you can trade nowadays. So you can pick things other than coffee, cocoa, and sugar to do this. So that's my 2 cents worth of why the charts still work, and I'm sure coffee trades well electronically. But as my grandma said, if you have the urge to trade coffee, go lay down on the couch till the urge goes away. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.